What if I told you there's a stock that could be at the forefront of a $110 billion industry, a company that's a giant in its field with products on shelves across America and Europe? But what if I also told you that this same stock has been a roller coaster of highs and lows, leaving some investors thrilled and others, well, not so much. Today, we're doing a deep dive into a company that's at the heart of the booming yet controversial world of cannabis, Curaleaf, ticker symbol CURLF. Is this your golden ticket to cashing in on the green rush, or is it a risky bet that could see your investment go up in smoke? Stick around, because we're about to break it all down. Let's start with the good stuff. Why are so many investors excited about Curaleaf? First, they are a massive player in the cannabis space. Curaleaf is one of the largest cannabis companies in the world by revenue. They have a huge footprint in the United States, and they're not stopping there. They're making big moves in Europe, which is a market with enormous growth potential. Second, brand recognition. You can walk into a dispensary in many states and find Curaleaf's products. They've built a brand that people know and trust. This is a huge advantage in a crowded market. And third, the potential upside. Analysts have set some pretty optimistic price targets for CURLF. With the cannabis market projected to grow at a compound annual growth rate of over 34%, and reach over $444 billion by 2030, Curaleaf is well-positioned to ride that wave. But it's not all sunshine and rainbows. Curaleaf has its fair share of challenges. For starters, they're not consistently profitable. The company has reported significant net losses. While they've shown some positive signs like generating free cash flow, the bottom line is still a concern for many investors. The US market is a tough nut to crack. While Curaleaf has a strong presence, they're facing intense competition, pricing pressures, and a complex web of regulations that vary from state to state. This has led to a slowdown in their domestic growth. And let's not forget the competition. The cannabis industry is getting more and more crowded. Curaleaf is not only competing with other big players, but also with a growing number of smaller craft brands. Okay, let's look at the numbers. In the first quarter of 2025, Curaleaf reported revenues of $310 million. While that's a big number, it was actually a decrease from the previous year. This was largely due to the challenges in the US market that we just talked about. On the bright side, their international sales are growing rapidly, up 74% year over year. This shows that their global expansion strategy is paying off. The company has a net loss of $61.06 million for the quarter. This is a key number for investors to watch. So what does the future hold for Curaleaf? A lot of it depends on the future of the cannabis industry as a whole. The big news, of course, is the potential rescheduling of marijuana from a Schedule 1 to a Schedule 3 drug in the United States. This would be a game changer for the industry, potentially opening up new opportunities for research, banking, and investment. Curaleaf, with its established infrastructure and international presence, is in a prime position to benefit from these changes. Now for the million-dollar question. Should you invest in Curaleaf? I'm not a financial advisor, so I can't tell you what to do with your money. But what I can tell you is this. Curaleaf is a high-risk, high-reward stock. If you believe in the long-term growth of the cannabis industry and you're comfortable with the risks, Curaleaf could be a compelling investment. But if you're looking for a safe, stable stock, this probably isn't it. My advice? Do your own research. Read the company's financial reports, keep up with the latest news, and understand the risks before you invest a single dollar. What do you think about Curaleaf? Let me know in the comments below. And don't forget to like and subscribe for more deep dives into the stocks that are shaping our world.